Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Recently, I was approved for a $25,000 business loan with Biz2Credit, and I mentioned this in the previous video where I discussed how you can get approved for a small business loan step by step. In that video, I went through different types of funding options that you can choose from. One of those options was online lenders, and the type of loan was revenue-based financing. Biz2Credit is an online lender that offers business term loans. They offer revenue-based financing and commercial real estate loans. The lender's term loans are available up to $1 million and revenue-based financing up to $2 million. And in some cases, such as commercial real estate loans, it can be even more. Unlike traditional banks that typically look for years of profitability and near perfect credit scores, Biz2Credit works with a broader range of businesses that focus on cash flow, revenue, and business performance, not just your personal credit score. Of course, no funding solution is perfect, and revenue-based financing through Biz2Credit comes with its own set of drawbacks, which we'll cover in this video, as well as how you can get approved for this loan today. So without further ado, let's get right into the video. Biz2Credit was founded in 2007 to match small businesses with funding needs based on what they're doing with their revenue. Biz2Credit has provided more than $8 billion in small business financing for more than 200,000 US companies. But Biz2Credit acts more like a marketplace and direct lender hybrid. They use a proprietary algorithm to match you with funding options based on your business profile, but they also directly underwrite many of the loans themselves. And that means the application process is quicker and approvals can happen within 24 to 72 hours. When you apply for a business loan, you'll be matched with the best funding option based on the information that you provided about your business. The two loan options we're going to discuss today will be the term loan with the average funding amount being $279,000 according to the Biz2Credit website, and the revenue-based financing with average funding amounts of $110,000 again according to their website. Even though we'll discuss both loan options, I'm going to focus primarily on the revenue-based financing since that's the type of loan that I was approved for. And next, we'll talk about qualifications, starting with the term loan. Getting approved through Biz2Credit isn't as difficult as going through a traditional bank, but there are still some minimum requirements that you'll need to meet to qualify for their term loan. Once again, this is not the loan that I qualified for, but I still want to go over it just to make sure that we talk about it. So first, the term loans from Biz2Credit range from $25,000 to $1 million with terms between 12 and 36 months. Your business should be generating revenue as well. For term loans, Biz2Credit usually looks for businesses that have been operating for at least 18 months and that bring in at least $20,833.33 in monthly revenue or $250,000 in annual revenue, which is also why I couldn't qualify for this type of loan according to the underwriter. You'll also need a credit score of 650 or higher. It's a soft pull. This was not a hard pull for me. I was not asked to unfreeze my credit, and all three bureaus were frozen when I applied for this. Now, this isn't a sky-high bar, especially compared to banks that may require years of financial statements, tax returns, documents, things like that. But Biz2Credit also considers other factors, including your debt-to-income ratio. They may use collateral, your business plan, as well as your industry type. So now let's talk about the revenue-based financing qualifications. Biz2Credit's revenue-based financing is its most popular loan, again, according to the website. This form of financing functions like a merchant cash advance, and we've talked about this before, but I'm going to briefly go over it again. Loans that are based on future revenue are revenue-based financing loans, and a portion of those future sales that you get for your business are supposed to go towards repaying the loan. Revenue-based financing amounts with Biz2Credit range from $25,000 being the minimum that you could take, all the way up to $2 million being the maximum. This type of financing, of course, has a lower qualification requirement. Biz2Credit requires a credit score of at least 575. So honestly, you could have bad credit and qualify for this, but you need to make a minimum annual revenue of $250,000. That's according to the website, which threw me off because I definitely did not make that much and I still qualified for this, but I just wanted to make sure that I use the information from the website so that I could provide accurate information that has been documented. But I'm telling you personally, for me, when I spoke with the underwriter, They were okay with the amount of money that I had in my bank account. And what I actually showed them was my personal bank account. They were okay with that. All I had to do was have the funds deposited into a business bank account. So from what I can tell, as long as you maintain a good balance in your bank account for the last 90 days, I would say maybe anywhere from 10,000 to at least 20,000 at least. You've maintained that with some deposits coming in and out. You can use that with your personal bank statements and you can get qualified for this particular loan. I think that's the easiest way that you can do it. But again, I was approved and I definitely don't make $250,000 a year. Even if you take the average of my bank statements and try to see what it can be after a year, it still wouldn't come out to that much. You also need to be in business for at least 12 months. Although Biz2Credit does not disclose the cost to borrow, I can tell you firsthand, they were charging interest rates around 32 to 34%. And I declined the loan because of this. They did come back and offer me a lower rate, which was weird because they say that on their website that the minimum amount that you could borrow is $25,000. They came back with an alternative offer where I could borrow $20,000 and then they reduced the rate maybe to like 27, 28%. So there is wiggle room for negotiation, even though it doesn't disclose it on the website, but I still declined it because that was way too high. According to the website as well, if your sales drop and you can't make a payment, your payments would be adjusted based on the revenue that your business brings in with this type of financing. So technically, if your sales drop, the amount of your payments will be adjusted to reflect the change in revenue. Now, these revenue-based payments can help you navigate through slow months in sales. However, in revenue-based financing, you are still responsible for maintaining the operation of your business and making all efforts to continue making payments. And even though this is a soft inquiry, you will still be held personally liable if you default on this loan. So you want to keep that in mind. Now, let's talk about the cost of revenue-based financing. This was a screenshot that I posted in our community because I wasn't sure if I should make a video on this, if people would be interested giving the actual cost of the loan. But it says, "Hi, Steven, thank you for your interest in business funding. Your application has been approved and the offer is as follows. The funding amount is $25,000 with a periodic payment of $721.59 weekly." That's, pretty expensive. And the term would have been 10 months. So the repayment amount would have been $31,750. Typically, it looks like they can fund this within 1 day of contract signing. After this was sent, I did get the contract, but after looking it over, I decided not to sign it, which then I asked to withdraw my application. Someone else did speak to me through like the next few days. I mean, they constantly send you emails, like it never stops. They send you a lot of emails for you to take this loan. So I spoke with someone again, and they were able to negotiate a lower borrowing amount, $20,000 for 12-month terms with a slightly lower cost, because again, it's not APR, it's not an annual percentage technically, because it's not like a year for this one. And to do a very quick calculation, I can't calculate the annual percentage rate because the term is only for 10 months, but I can show you an easy way that you can get your percentage of what you're paying. If you take the total cost of what you're borrowing, which in my case would be $31,750, they did take a fee from the amount that I would borrow. So I actually only got $24,100. You want to keep that in mind. They do take a fee. In the end, I would actually have to pay back $7,650. Now, if you take that $7,650 and you divide that by 24,100, then you get 0.317. If you multiply that by 100 to express that as a decimal, you're paying 31.74% back of what you borrowed, and that's in less than a year. So with that being said, even though I'm not giving you like an APR, an annual percentage rate, again, not for a year, to pay back 31.74% of something is egregious. Now, I want to give you some things to consider. When it comes to really life, there is no absolute. Nothing is absolute. There is no absolutely good, absolutely bad. There's only things under certain conditions, and everything is situational. This isn't technically a bad loan offer depending on what you can do with it. Now, I don't think this is for small loans. Biz2Credit offers term loans and revenue-based financing, both with a minimum, at least from what they state. Again, I got offered $20,000, so clearly they might be able to go lower, of $25,000. That's what they say on their website. A different lender may be a better choice if you don't need that much for your business needs. Now, the cost is not transparent. Even though I want to give you a transparent cost and say that you would get the same exact thing as me, I could never do that because they don't disclose this information. Clearly, from what I can tell, they work with multiple different lenders and they come up with their offers. So whatever I'm telling you right now might be different next year. It just depends. So even though, they don't disclose all of that about their loan products, they can pre-qualify you. And when you do get pre-qualified, you'll be able to see the rates and the terms that you may be offered, and it doesn't impact your credit score, which is good. Now, the situation where this actually does work, let's say you have a good business, you have a realistically good business, and you expect that you can make 10 to 20 times your return. You expect that you can really do that. Normally, if you had a great business like this, there would be angel investors or venture capitalists. Sometimes people take capital from these particular places, and they are very expensive sources of capital for a startup because they want equity. Now, think of something like Shark Tank. Someone's going to give these people who have these great ideas $200,000, something like that, right? Except they want to take 40% of their business. In the grand scheme of things, if you could take $25,000 from, let's say, Biz2Credit, and you can 10x that, you're going to make $250,000 and you don't have to give up 40% of your business. So hopefully that kind of, that makes sense to you, and why ultimately revenue-based financing is best for startups that are looking to grow their business aggressively without taking on like a fixed amount of debt or diluting their ownership. Now, for most of you watching this video, I don't think that's your situation. If you do have that and your credit just so happens to not be in the best shape, something like this, if you're making enough money, could make sense if the amount that they give you, you can 10, 20x, like you can really make a lot of money off of that. In comparison, what you're paying back is minuscule. So to sum everything up, if I thought I could take this $25,000, 10x it, and make $250,000 within the next 10 months, this would make sense, especially if I don't have great credit, but I know I have an amazing business and I do not want to give up equity. This is when this would make the perfect sense for that type of person. Now, applying for this is very simple. We'll go to the website. I'll walk you through the process, but it could be done in 4 easy steps. So you'll want to create a Biz2Credit account. You're going to sign up and provide a few business details. You'll get pre-qualified instantly. They'll let you know exactly what you pre-qualify for. You'll submit the application and complete a short form about your funding needs, and then you'll receive your approval once it's been reviewed, and you can receive those funds within 24 hours. So currently we are on the Biz2Credit website. To begin, you'll want to click on Apply Now. Now, this is where you're going to create your account in order to pre-qualify and see how much your business can actually get. And you would then put how much does your business need. Once again, the website says 25,000. I would put anywhere between at least maybe, let's say 50 to 100,000, or you can also do 20,000 to 50,000. If you have a business that has great revenue and you need more than that, then you know that you could put the maximum amount of 300,000 plus. But for this one, I'll just do 100,000 to 150,000. And then you'll also want to put the purpose of your capital. That's really up to your business. You can choose, I would choose working capital or maybe buying inventory, something of that nature. But really, it just depends on your business and what you're trying to actually do. So I'll just choose working capital. Then you'll also want to put the length of time. I always pick the longest length of time, but with this one, the longer you go out, the more it might cost. So again, it varies, but at the end, you can negotiate with them to change your term. Then you'll want to enter all of your contact information. your first name, your last name, your email address, your phone number, your annual revenue, your time in business, and your credit score. Now, because I already have an application that was already completed, I wasn't able to do much more once I set this up, but you'll follow the prompts and eventually you'll register for an account. When you have an account, it'll say get started, application, and then you'll want to follow the steps to finish your application. There will be a section where you'll be asked to connect your bank account. They're going to use that information to see how much your business revenue is. Once again, you can actually link your personal bank account if you want to. If you have a good amount of money, that can actually get you approved. Just that alone, you will need to have a separate business bank account for them to deposit the funds. Okay. After you do that, you will get a decision, and then you can get funded. And again, it's very quickly. It can be done in about 24 hours. What they pre-qualified me for was $50,000 with this amount of annual revenue, which is, again, it's funny because it's not 250,000, but with 175 with the credit score of 750 to 850. But once you go through the process of completing this section and uploading the documents or linking your account, you're pretty much good to go. They will reach out to you, and from there, you can even negotiate the terms that you would like with this particular loan. Thank you guys so much for watching this video. If you were able to get approved for this and you took this, let me know what your terms were. Let me know if it makes sense. The thing about it is, guys, when it comes to business loans, a lot of you want me to make videos on like EIN only, no PG, low requirements. I've said this before, whenever you're looking at any no PG credit cards, whenever you're looking at business loans with very lenient requirements, you either one, have to have excellent credit, or you need to make a lot of money in your business. It's one or the other. It will never change. Either you have good credit that you could leverage with very little documentation, or you have to show that you make a lot of money with bad credit. It's pretty much one or the other. So if you guys want more videos on loans like this, I can give you more of loans that you can possibly get, but you got to have the revenue. Or I can do the other one, but you got to have good credit. But again, one or the other. And you guys have a wonderful day.